Hello and welcome back to Swing Trading Masterclass by Wealthy Education. In this video, we're going to take a look at choosing the best chart timeframes. Now, here's the thing. There is no direct, correct announcement. You can't just say, hey, I believe that the daily time frame is the best time frame to trade. Now, by its very nature, swing trading is trying to capture bigger moves. So that right there tells you, you're not worried about the moves on like the 5-minute chart or the 10-minute chart. You're wanting to capture bigger moves. You want to do things like short the market or sell the market up here and buy it down here. Now, you're never going to get it perfect, but you would have not caught this based upon like a 15-minute chart. You click on 15 and, you can see it's very noisy. You have a lot of those gaps, that we talked about in the last video. It's really difficult to kind of suss out what's going on. So, you go to the hourly chart, it's still pretty noisy. You go to the 4-hour chart. Now you're talking about being able to trade a little better. As a general rule, you can fine-tune your entries and exits on the 1-hour chart, but typically swing traders are looking at daily charts, sometimes even weekly charts. Just kind of depends on the asset. So here's a daily chart in dollar Swiss franc. And you can see it's just been a nice, slow, gradual grind, except for this area here, for quite some time. Now, you can go to the 1-hour chart to find entries and exits, and it doesn't move too crazy. Now, this happens to be a market that's not very volatile. It doesn't move very quickly. So, you don't have to worry about getting faked out on a 1-hour chart. But again, a daily chart works just fine. It's just not a market that moves super fast. Bitcoin, you can see this is a daily chart. You've had massive moves over the course of a month or two based upon the daily chart. Now, when you go down to an hourly chart, Bitcoin gets a little bit sluggish. So at that point, you're looking for swing highs and lows. So swing high when we rally and then we break back down. Swing low when we fall and then we bounce again. So some of the swing highs and swing lows would be like this. That's a swing low. The market rose and then pulled back. That's swing high, swing low, swing high, swing low, swing high, swing low, swing high, etc., etc. So you're looking for those types of moves. Now, there are other markets that might move a little quicker, like pound Swiss is pretty volatile. Or especially when you start talking about like pound yen is a really fast mover. So this is one this is the daily, and you can see how all over the place it is. But when you go down to like 15 minutes, forget about it. Just sudden moves like that. You're talking like 30, 40 pips in the blink of an eye. So with this one, you're going to want to stay away from the lower time frames. And it really comes down to what you're comfortable with. And then there are other ones out there that like, US dollar, Mexican peso. This is the daily chart, right? This is an exotic currency pair. So trading on the 15-minute chart is just torture because the bid and the ask, if you remember that, sometimes can be like 100 or 500 ticks. So your bid and ask might be that far apart. So it's almost impossible to trade on short-term charts like this. So again, this can be traded on the daily. It can be traded on the weekly, with quite a bit more ease than you get in other currency pairs. As a general rule, though, look to the daily or the weekly for the setup, and then drill down to the 1 hour to kind of get the fine-tune entry.